Hello everyone, welcome to another BAF meetup. Just quick introduction about the talk today. If you're completely new about the crypto world, don't worry, don't be scared. If you've lived in the traditional finance world, don't be scared. We're gonna unwrap what decentralized finance is, what it can do for people, and in particular, talking about Zapper and how useful this tool is for the whole DeFi ecosystem. With me today is Nikita Buzov. Nikita is the president of the blockchain club at UC Santa Barbara. Very excited to have you here, Nikita. I used to run the club last year and head it up to Nikita, who's doing an amazing job. I leave the stage to you, Nikita. I'll see you guys later.
Thank you.
It's a pleasure to have all of you guys here and have Seb join us today. So let's start with just quick introductions. Seb, please tell us about yourself a little bit.
Yeah, so I have a background in finance, so I graduated in finance, and like during my internships at university, I kind of found that, finance was a bit like boring, or, there was a lot of red tape and, I couldn't do much. So during like one of my internships, I decided to learn how to code. And from there, really just dove deep into that and ended up never actually working in finance after I finished college. So I started a position as a developer right after school. And from there, crypto was this obscure thing. And in about 2017, during the crazy bull run that we got, that's really when I started to, get interest into cryptocurrencies, more precisely into what wasn't called at that time DeFi. So there were some protocols that were kind of tackling more financial applications. And that's really when like I put two and two together. Like I saw how finance could, be an industry for creatives and people that, wrote code. So for me, that was just a huge revelation. And then worked at a company in Canada called ShakePay cryptocurrency. And from there started to really learn more about DeFi, started investing my money. And at one point it was getting really hard to track my assets. Like I had this spreadsheet filled with a bunch of different investments, and it was just really hard for me to track everything. So decided to build a small application that would help me solve my problem. And in January we launched DeFi Snap, which is the precursor to Zapper. And yeah, I mean, from there just got a pretty good traction, and yeah, it's been a crazy adventure since.
So I'll just take it from here. Really cool way for you to like get involved in the space. I guess your time at the previous company doing fintech stuff, like what exactly were you doing there, and how has it sort of influenced what you're working now at Zapper?
Yeah, so at ShakePay, I worked there mostly as a product designer / developer. So had a bunch of different hats because it's a startup. And for those that aren't familiar with ShakePay, you can kind of think of it as the Coinbase of Canada. So an easy way for people to be able to buy Bitcoin and Ethereum. And there we were really just trying to tackle, how can we make it as easy as possible for people to come into crypto, have it be welcoming, especially for Canada. It's an interesting market because it's been kind of plagued by a lot of bad exchanges. Like there was the Quadriga issue, another exchange that had some problems too. So the market was in a place where there was a lot of problems with, building trust with the consumer base. So a lot of what we did there was to, help build trust. But honestly, like my interest in DeFi is kind of totally outside of ShakePay in the sense that it's kind of taking my background in finance with, my love for building things. And for me, just a way to be able to build new financial applications. So yeah, it was just while I was reading more on the topic of DeFi while I was at ShakePay that, that really started to appear.
Yeah, definitely probably gave you a good insight on, especially the user experience side of things, because it seems like that's what Zapper really to me emphasizes. It's like making it as easy as possible, but for this new, world of finance. So for those out there who do not know, would you mind defining what decentralized finance means to you, and also what it will enable for the world in your grand vision?
Yeah, that's like a really tough question to answer, but like I think the easiest way to frame it is like you can think of decentralized finance as really the first application of the internet of money. It's the first time that anything of value, anything of money is really put on the internet. Now, a lot of people might think, well, I mean, I can use my banking app and I can send money to my friends, but that really is just an illusion. Like you can think that it's really on the internet, but in the back, it's still legacy systems that are doing, relying on old technology that is super expensive to run. And so decentralized finance kind of allows, just like the early internet, anyone in their basement could create a website. Well, for DeFi, anyone in their basement can create a financial application. And what brings with that is a lot of innovation. And just one like simple example is when you deposit money into your bank account, you get like a small like rate, interest rate, like super tiny. And the bank in return takes the money that's deposited and lends it out at a much higher rate. And in the middle, there's this huge spread, right? 15-20% that the bank needs to run its business, because a bank is a very expensive business to run. But with DeFi, since it's completely new technology, you're able to cut the middleman completely, and have these new types of application where the user gets much more, a much better rate. Like I could go deposit in DeFi and get a reliable 5, 6, 7, and much more for the riskier appetites. And even on the other side, someone that's just wants to borrow, he doesn't have to go through all this process with the bank. He can literally just hop on into DeFi and borrow without talking to anyone, which is a huge, which is awesome for a lot of people. Like, I don't know for you, but I don't like dealing with my bank, and just being able to either borrow money or just lend without talking to anyone. It's a very freeing feeling.
But it's super awesome, but it's still early.
Yeah.
And it's still like right now, if you're trying to go get a loan, they're over collateralized loans.
Yeah.
So for those who don't know in the audience, that means you have to put up more money in order to borrow anything. So if I wanted to borrow $1,000, I'd have to put $1,100. And the reason for that is there's no real good way to assess risk on the person willing to pay that back. So, but before getting into like, I guess, yeah, to expand from that, the rate itself, how is that really established? And like, where is this rate coming from? Because that's really confusing, because sometimes I'm on like, Zapper Finance, Zapper.fi, and I see these rates as like 2,000%, or it doesn't make any sense to me. It seems like unrealistic. So what actually goes into setting these rates?
Yeah, so there's different types of rates. There's the more like traditional, like I guess, interest rate that you get from depositing funds into, say, a compound, which is just an app where you can easily lend money. And from there, the rate is just based on demand, supply and demand. So the more demand there is to borrow that asset, the higher the lending rate, because they want more people to deposit. So say USDC, there's a lot of demand to borrow USDC. Well, the lending rate will increase because there needs to be this incentive for more money to pour into that account to be able to supply to accommodate everyone that wants to borrow on the other side. So that's kind of like the more traditional aspect of it, where it's a traditional interest rate model. But for the riskier appetites, DeFi has been known for its crazy high rates. And honestly, most of the time, it's taking let's say ABC token that just launched, and you get an insane rate out of it because there's a lot of demand for it. So in the short term, the rate will say oh, 2000%. But the thing is, like, what happens is it takes just a few days of data and kind of extrapolates it to a year. So it sounds like it sounds like great, but what actually happens is it's kind of saying, well, if the performance was, you know, plus 10% in the 3 days, let's compound that to like for a complete year, and then you get that 2000%. So like, honestly, most of it is, I think, kind of not a good practice because it's very misleading and super unrealistic. Like, most of it is just marketing.
So yeah, how do we fix that? Because in order to, you know, really, I think, make the space mainstream, we're going to have to come to terms with yields that aren't 2000%. And, you know, I think that there needs to be some sort of like guiding voice in the industry around this. Who do you think, I guess, that should be? Because right now, a lot of people think DeFi is sort of a big Ponzi scheme because of these crazy rates. And that's where, just because they don't take the time to like truly look under the hood, but also anytime that they see these rates, it just screams Ponzi scheme. Mm-hmm. So how can we sort of work as like a community to maybe craft the narrative better to bring in that big institutional money? Because that's really where things get exciting, I think. Yeah,
I agree. I think the market will mostly like self-regulate itself without having like a specific party promoting this. So so like in August, DeFi had this huge explosion of yields. Like, so you had yields in the 2000%. Like, there was just some crazy yields, and a lot of people realized that this wouldn't be sustainable, and in fact, those weren't sustainable at all. And now we've kind of, you know, crashed back down to earth. There's still, you know, some projects that have some, you know, crazy yields, but I think that's getting more and more segmented from the mainstream DeFi, because what happens is there's a subset of users that their goal is just to flip through a bunch of different tokens and get as much yield as possible. But I think with time, that will just kind of be its own very small subset of the market. I think a lot of people kind of learned from what happened in August, and like, obviously we're going to continue to see these things happen, but I think a lot will come through, you know, self-regulation and kind of the market learning from its own mistake, just like in 2017, where the market learned from the craze of, you know, the ICOs. And that's why we kind of, like, the ICOs we see today are completely different from in 2017.
Absolutely, yeah. I'm super curious to see where DeFi will be in like 4 years from now, when there's good throughput across all chains and interoperability and, you know, whatnot. Heyo, Nikita, how's it going?
I'm good.
Awesome. Beautiful.
All good.
Well, Seb, it was a pleasure talking to you.
Yep, thank you. Good job, Cameron.
And Nikita, you can take it from here.
All right, so how far did you get?
Yeah, so we did a bit of an intro into DeFi. We talked about the crazy yields in DeFi as well. And I think, yeah, we obviously did an introduction, like I introduced myself, and that's pretty much it.
All right. Yeah, let me do a quick introduction of myself so people are aware. I'm a computer engineering PhD student at UC Santa Barbara. I've been interested in crypto for, I guess, the last like 3-4 years. My interest has started with mining. I got obsessed with, you know, mining on GPUs. I got a bunch of like Bitcoin miners, and then starting like building miners, and we built like a bigger production in Latvia. So that was my interest. But then after the bust, I kind of started coding more, and now I'm just more interested, I guess, in Ethereum in general and like developing on it. But obviously, you know, yield farming hard like over the summer, and now the yields aren't as good. But so that's kind of like been my journey through the space so far. So okay, let's move on to the questions. What's the value proposition of DeFi? Like, how would you think of it? You know, we can start small from just the crypto space. Like, what is what good does it do for the crypto space, but then also for the broader economy? Like, how can this be utilized in a broad market?
Yeah, so that's a really good question, and I think I would kind of tackle it in different pieces. So the number one is DeFi for builders. Like, what does DeFi enable for builders? And really, like, if you're, and you can know it too, Nikita, if you're a builder, you know how hard it is, or actually impossible it is to build stuff in the old financial world. There's a lot of gating. It's just very hard to push out any type of innovation. So for a lot of builders like you and me, we have this kind of clean slate where we can build from and build applications that compete with legacy finance. But for people like outside of that sphere, I think, like, number one, it's a new sense of freedom. So you know, mostly in Canada and United States, like, the value of DeFi isn't as high as I would say someone outside. So just the first thing, like, a lot of people don't even have access to basic financial services. So for them to be able to lend their money and earn an interest rate on it is amazing. That's outside of the control of their own government regulation. They have access to exactly the same services as us in Canada. They can borrow as well. They don't need to talk to anyone. Like, this system doesn't discriminate against anyone. So for them, there's definitely a lot of value added. And I mean, just for us in, like, say, Canada, United States, Europe, and other countries, since DeFi cuts out the middleman, there's a lot more return we can make from our money. Like, there's a lot more, and I had this example earlier on during the talk, where if you deposit into your bank account right now, you get a very small savings rate, whereas in DeFi, since the middleman is completely cut off, you're able to unlock much more, which with a very similar kind of pattern or technology. Like, at the end of the day, with whether it's the bank or whether it's anyone around the world, you have people that are borrowing and lending, and the more you can cut off the middleman and have a system that doesn't keep a sizable chunk in the middle, you can unlock a much more fair portion from the lender and the borrower. So that's like one aspect to it, but DeFi is even much larger than just lending and borrowing. There's completely different aspects to it that we've just scratched the surface of. One example I like to give is Pool Together. So Pool Together is like a type of product that wasn't possible before. And for those that don't know exactly what Pool Together is, it's basically I deposit money inside a pool with a bunch of other people. That money is lent out on a lending platform. So it earns interest. So the pool continually grows. And every week there's one random person outside of everyone that pooled their money that gets to keep the interest. So it's kind of like this new type of lottery that wasn't possible before. But that's kind of an example of just us scratching the surfaces of application that was just totally not possible before.
Great. Yeah, you already kind of started answering the next question. So let's kind of talk about what are the components of DeFi. Like, you already talked about, lending, borrowing, like what other tools are out there? Like, what pieces are being built, which already work, and what are the some that we still have to build?
Yeah, so lending, borrowing is an obvious one. There's options. So for those that are unfamiliar with options, it's basically saying agree that I will be able to purchase an asset at a specific price at a future date. So that's something that's being done with DeFi. And what's cool is, like, today I don't even know who I would talk to be able to buy an option. Whereas with DeFi, I can just do it like literally in 5 minutes without talking to anyone, without doing anything, without signing any type of paper. So there's a huge freeing aspect. So yeah, there's options, there's derivatives. So one cool project is synthetics. And that's kind of one of the projects that really caught my interest early on. And for those that don't know what a derivative is, it's basically it's basically something that tracks the price of another asset. So you could have a Tesla derivative, and if Tesla goes up in price, well, the derivative that you own also goes up in price. And what's cool with that is it's now possible to gain exposure to some assets like gold, traditional stocks, without having to, create an account through a centralized service. You can do it completely through DeFi and be able to gain exposure to say gold. So that's another example that I probably would have to spend a day, be able to know exactly how I could get exposure to gold or sign up to X service, but I'm able to gain exposure to gold without even having to create an account. That's something that's really cool. And the last thing, and I'm probably forgetting a ton of different things, but probably the last thing I wanted to talk about is elastic finance, which is a super interesting topic, in my opinion, and also a bit controversial. But what's really interesting with elastic finance is it's really something that's never been, applicable before in finance. So one example is Ampleforth. I'm taking Ampleforth as just a simple example, but it's basically if you own one Ample and the price of Ample doubles, well, instead of the price of Ample actually doubling, it's the supply that would double. So the price always stays the same, but it's the supply that increases in response to increase in demand. So what's cool is you can have this mechanism where instead of the price increasing, it's the supply. And I'm sure we're going to see a ton of more, crazy applications around that. We saw a few during the summer with YAM. We're seeing some with empty set finance that are super interesting. So that's another aspect that it's kind of weird when you first look at it, but in the future we're going to start to see more of these crazy type applications appear.
Yeah, definitely. Ampleforth is an interesting model because you come back, you check the price, it's always $1, but actually it's been doing pretty well. Okay, so do you know of any financial products that have not been decentralized or sort of ported into this decentralized crypto world?
Yeah, well,
or the ones maybe that are in infancy. For example, the insurance market is still very young and early. We've only seen a couple real projects launch, and there's still sort of this testing phase. Even though they're millions of dollars already locked in, it's hard to tell if they're actually working well.
Yeah. Insurance is another one that I completely forgot to talk about, but it's a huge use case. And what's really interesting with insurance is, so what happens is people like you and me, if we want to earn yield, we can put money inside of a pool, and that pool is used to insure something, right? And we are able to earn a premium while that insurance is going. So we're continuously able to earn yield. And what's really interesting is that we've started seeing DeFi insurance used to insure stuff outside of DeFi. So you use to insure financial products that are completely outside of decentralized finance. Because what's really interesting with insurance is the network effects in DeFi are so much stronger than outside. So you're able to very quickly get a sizable amount of money to go as protection for a specific thing. So that's a huge advantage that we don't really have outside of finance. And perhaps one of the reason is that old finance is very regulated and it's very hard to move quickly, whereas in DeFi things are kind of moving on a Cambrian explosion phase. So things happen very quickly. There's a lot of network effects that we're able to leverage much more than in traditional finance.
Yeah, right. And this is the beauty of the space. You know, as you said previously, everything moves fast, and like it's all just on our screens. Like I also don't know how to like use derivatives or options in the traditional world, but you know, I've tried them just a few days ago, and it's very easy and accessible, which is nice. We have a good question from Christina about how secure is DeFi, and you know that's a big question. Obviously, like so right now, most of the projects get this validation from audits from external parties and like hacker groups that look through the smart contract code. And another solution is the insurance, because basically your security is limited by how secure the smart contracts are. And so there are different approaches to security. Seb, do you want to kind of touch on that question?
Yeah, no, and you're absolutely right. And like how secure is DeFi? Like the answer is it really depends. There's some apps I would probably trust more than a lot of financial services outside of DeFi, but there's also some apps that you have to be really careful about, because since the cycles of development are so sped up that it's easy for some bugs to appear, or some, you know, some issue with a smart contract or something. So it's honestly, it's kind of like the Wild West. So like with great power comes like a lot of responsibility, and like you have to be careful in DeFi right now. Like you can, like if you want to have all of the options available for you, you have to be very careful about which product you decide to use. But there's a part of DeFi that, in my opinion, is extremely secure that people can definitely leverage a lot from. And I think it would be unfair to taint a lot of very good products that are extremely secure from, you know, kind of more of the Wild West type products that we're seeing appear.
Yeah. All right, let's talk a little bit about Ethereum more generally, because we see all these DeFi's, you know, started on ETH. It's the biggest platform right now with the most developers. Do you think it's like is there a better suited platform than Ethereum? You know, we see some projects pop up on, you know, Tron. I mean, Polkadot is you know, shooting up, and we see some development there. How would you compare the platforms?
Yeah, well, I think, you know, other competing protocols will have a very tough time, like just to compete with DeFi, because like DeFi works with network effects. It works, the more products there is, the more users there is, the more money there is, the bigger, you know, the moat that DeFi is building, and the harder it is to bring down. So what I see is these chains, you know, Polkadot, Cosmos, Binance Smart Chain being complementary, and the real DeFi hub will always be Ethereum. Like there's nothing that is basically telling like otherwise, unless there's like a catastrophic failure on Ethereum. There's really no reason to believe, even if technology is better on other chains, at the end of the day, that's not what matters in the sense of DeFi. Like DeFi, the point that why it's so, you know, it's so important is because you have all these players that are plugged into each other and kind of feed off each other. And all of these pieces are helping the other make a even stronger product, a stronger movement. And yeah, it's just like this snowball effect.
Yeah, I agree. So the way I think about it is, first, just by the number of developers, like none of the chain can compete even like closely, like how many people work in it on Ethereum. The other one, you kind of like already said that it's just liquidity. There's so much liquidity on Ethereum that none of the chains can actually, you know, compete with that. And so this scale when you see how like secure the network is. Like it's been the longest here pretty much. Like if you compare it to all other smart contract platforms, it's been here the longest with the most development being happened on. And so a lot of people trust this network for its security, and that's why they use that. So as far as like scalability and security of the network, it's I think it's hard to compare to other platforms.
Yeah, absolutely.
Yeah. Okay, so let's since like the topic is DeFi degeneracy, let's talk about just cool projects and their launches. So we kind of seen different approaches to bootstrap liquidity, because basically in decentralized finance, it's all about these pools of money. You know, you cannot use options if there are not enough people using the platform on both sides. You need the buyers and you need liquidity providers. The same for decentralized exchanges and all of that. So, you know, we've seen some different models, how projects launch and get their liquidity. Can you tell us like some of these platforms, how they bootstrap liquidity? What's their approach?
Yeah, that's a good question, because as DeFi has evolved, that changed a lot. So taking like early examples, so two of the biggest projects in DeFi are Compound and Uniswap, and they both used kind of the same technique to bootstrap their liquidity, which is very traditional, is with investments basically. So Uniswap, which is a decentralized exchange platform, where people can provide liquidity to create these exchange pairs. Well, if there's no liquidity, if there's no pairs, nobody's going to exchange. So you kind of have a chicken and the egg problem. So to be able to jumpstart their product, they had investors, help them start with a few pools that are, very popular exchanges. So, for example, ETH to, I don't know, USDC. I don't know if that pool existed back then, but that's kind of like a simple example, and start from that. But now, like this summer, we kind of seen the total opposite. So through what we call liquidity mining or yield farming, like a lot of projects were basically able to create these incentives that people could provide liquidity, and since you're providing liquidity to this protocol, the protocol would reward you with a governance token. So say, for example, SushiSwap, which is a competitor to Uniswap, the way they were able to get with so much liquidity, which I think is close to $1 billion, I'm not sure exactly, maybe 500 million right now, which is a lot of money. The way they were able to get to that was through incentives of, well, if you provide an amount of money into SushiSwap, we will reward you with sushi tokens, which kind of tells you that you are a good actor to the systems. You're helping us bootstrap, so that means you're able to vote in governance and basically have a stake in our system. And we're seeing that as being an extremely effective way of quickly raising money. Now, the major issue with liquidity mining or / yield farming is that it isn't the best way to have a community that's incentivized long-term. I think SushiSwap did a really good job, but the problem with that is a lot of copycat projects appeared and just tried to use the same strategy. So you had people that would just jump from a SushiSwap to another opportunity, and then to another protocol, and then to another protocol, with no good intention of staying there long term. So they were actually just rent seekers and not looking forward to being long-term actors. So there's some goods and bads to different strategies, but with time, we're seeing more and more incentive mechanisms to be able to have people help you, bootstrap liquidity in your protocol, but also be able to be a long-term member of your community. Synthetics, which I should have talked about, because that's a really good example of a almost 100% bootstrap liquidity based on incentives. And what's interesting with synthetics is that it appeared in a moment in DeFi where it wasn't very popular. Crypto was, going down, and their incentive was interesting because yes, when you provided liquidity, you were able to, earn more tokens, but those tokens were locked for a year. So already there, it would kind of, filter out short-term investors and would really keep the long-term investors. So they were able to build a very strong decentralized community through these incentives. That's why the community is kind of like called the synthetic Spartans, because they were born during a bear market where, the people that stayed in synthetics are the really strong believers, and they help bootstrap the liquidity for a very long time. So that, protocol is in a good space because it's backed by a lot of long-term believers that still to this day pull a lot of liquidity in there. So yeah, there's a lot of experiments to take in from, but the most effective way from what we've seen this summer to quickly bootstrap is through, liquidity mining.
Yeah, and on that, so I was providing liquidity, like going through the uni program for 2 months. And then basically, once the uni distribution stopped on Uniswap, we've seen the liquidity just drop by like $1 billion. In like, I think around 500 million just ported to SushiSwap, same pools. Everybody just basically went from Uniswap to SushiSwap because SushiSwap was continuing to emit those sushi tokens. So, pretty much everybody's there to seek yield. And so, with these liquidity mining schemes, you're not necessarily rewarding the people who are the most interested and like vested in the platform from long-term perspective, but are there just, for the yield, which is, it's fair. The capital must be rewarded because without it, the platform wouldn't be live. But that model is, has its downsides kind of to it.
And there's another like interesting model, which is like retroactive mining. So that's super interesting, and Uniswap kind of really helped, set that path up where you hand out tokens to people that, helped your protocol in the past, like people that provide liquidity to Uniswap in no intention of earning a token from it. They were just doing it for yield and because they believed in Uniswap. So we might see even more projects use that route to build a strong community. Perhaps like we've seen Uniswap rewards, I think 15% of the total supply retroactively. But I think we could see some projects do even more than that.
Some projects launched like this just recently. There was like an airdrop by Badger. I don't know if you heard about their launch or not, but they're basically like doing these vaults for Bitcoin on Ethereum, and then they did they started with an airdrop they are doing the liquidity mining, and they're rewarding their Badger token to people who lock the funds in as well. But to kickstart the platform, and so people get kind of interested, I assume, they did the airdrop based on the block that happened on August 4th. So, or like some time ago. So people who used, let's say, Bitcoin on Ethereum back then, they got Badger. And there are a lot of different wallets that got it, not just for the Bitcoin people who use, I think, Uni and like a bunch of other platforms. Pretty much they picked the people who were using the ecosystem back when it was not as hot, back before the Yarn finance days, and giving out tokens to that. So, I was happy to receive my airdrop, and also, and it also, I think, incentivized people to look into the platform. I personally don't think I would be too interested in Badger, but by getting those, free tokens kind of like incentivize you just to look into like, what is it? and if you should just sell right away or keep it or do anything with it. So I think that's also this model of airdrops can have like a positive effect for the platform. All right, well, let's go on to the next question. So, like how much reward should developers get versus like liquidity miners? Like these everybody comes up with their own token economics with like how much they want to allocate to the team, to the treasury, to liquidity mining, and all of that. Like what do you think is fair or like a viable model for the new DeFi projects or the existing ones?
Yeah, it's always hard to like, say exactly what's fair or not. So like in traditional like startups, like a founding team, like at like a 1 billion valuation can still end up having like a sizable portion of the company. But for a token, since you're building decentralized community and wanting to be really spread out around the world and not have this centralized, power dictating how the product should function, then it definitely makes sense to have a much lower percentage go towards the founders. But the problem with that is that what happens is that it's kind of just a race to the bottom where you have a lot of different, copycat projects that do exactly the same thing, but just with a smaller portion going to the founders, and it kind of divides a lot of the talent across the landscape, which is kind of like, it's also just kind of saying let the free kind of like the free market decide. But in terms of talent, we're seeing a lot of talent kind of just divide itself and work in these small funnels, where a lot of the value could have been brought into like the main project. There's very few examples, in my opinion, of like a successful fork that was like, I think SushiSwap is one of the rare good examples of a good fork. A lot of the time, I think it's just a few people that are trying to basically just quickly fork a project to make a quick buck out of it or to push a different narrative. So like one narrative that we've seen in DeFi is kind of the anti-venture capital, side, which is interesting, which is like, I totally see a reason for it. The only problem with that is, take for example, I'm just trying to think like of a project that I can talk about this, but like take an example, like you have a project like Compound that was VC funded, and then you spin out a fork of it, and that fork pushes out a narrative that we're community driven, it's not VC. Problem is DeFi is anyone can participate, so VCs can still buy your token. Like it doesn't change much. Like there's not much to be pushed from that narrative, since actually any VC can buy your token instead of just a few that you choose. It's really anyone. So there's some good and some bads from that. But yeah, I guess my point is like, you have to be careful with the narrative pushing in DeFi, and also like I think it's important to find ways to have people work together on projects instead of having kind of this talent be divided across a bunch of different forks.
All right, that makes sense. Yeah, I think this is just a question that a lot of people kind of face, because you see the projects that when they advertise themselves to being like saying, oh, we're community driven, or we don't do any like pre-mine or like keep anything to ourselves, we're all about giving back, but in reality it's not as just straightforward.
Yeah.
But I think it's time to move to like Q&A. We have a bunch of good questions here. We'll start with the one most upvoted, obviously. How long will it take for the average folk to trust code versus institution bank?
Yeah, that's a good question. I think the average folk already trusts more code than they think already. Like most of the stuff we use every day is based in code. But to like on the financial side of that question, I think it's going to be a bit like the internet. It's going to it takes some time for technology to be adopted, and we're kind of seeing technology move quicker than how we socially evolve, in the sense that technology is moving so fast that it's moving faster than our capacity to kind of adapt to it. But in this case, yeah, I do think it's going to take a while, but much faster than the internet. So just DeFi in the last year, there's a lot of people that, I think MetaMask said that they had 1 million active users, up from like five times from last year. So, that will just compound every year. And I think in 10 years, DeFi will just basically be finance. We're not going to call it DeFi. It's just going to be normal finance.
Yeah, I think so too. I think also a good question to ask, who really likes their bank?
Yeah.
Who enjoys their services? Who thinks oh, this is amazing, right? I think a lot of people are actually not very satisfied, with the infrastructure or the services they offer. It's sort of just, it's a monopoly system where you have just a few big banks and they control it. If you want to move money or get salary, the businesses, everybody's forced into the system.
Yep, and there's no incentive for the bank to become better. There's no new startup that's appearing that is kind of threatening their position. So, yeah, it's good to have all this competition and innovation, because it's really putting pressure on banks. Most of us, we don't actually kind of choose. Well, we do choose our banks, but through 4 or 5 options, and they all basically do the same thing. Yeah.
All right. The next question, what's the best way to stake ETH? How would you answer that?
Yeah, man, that's tough. There's a bunch of ways you can stake ETH. I think it's I assume it's for staking for ETH2. I am not sure exactly, but
yeah, Talon, if you could say something in the chat, what exactly do you mean? But yeah, I would assume staking ETH 2.0, because we see some options there. Obviously, everybody's pushing the narrative that everybody should stake on their own, just run their own computer, and people can do it on small computer or some old machine. It's fairly light as far as hardware goes, but there are some services poking up there and there. I know Binance and Coinbase, they offer sort of this retail small scale, because for staking Ethereum, you need 32 ETH to open a deposit, and obviously the wider population doesn't have that much. So they could opt in for these big players who do the custodial way, where basically they keep your keys, they keep your crypto, and you have an account. But people with more ETH can hire services for that. There are some staking services that basically manage the hardware. So you sort of and you can do it non-custodial way also. So you can keep all the keys, just give out the key store for a third party company to run the hardware for you. And so yeah, if you're about ETH2, I mean, I run my own staking server, and we sort of started in this. So if you want, you can stake with us, honestly. But it's there are options out there. Obviously, it's just started 10 days ago, the Beacon chain. So some services are not completely live yet. Like Rocket Pool, you can look into that. That's an interesting system. They sort of try to build this platform where they connect people with hardware and people who want to stake, and so they sort of work as an aggregator there. Okay, let's go on to the next question. It's what is liquidity mining? I think we kind of skimmed over that.
Yeah, I can maybe give like a simple example of what liquidity mining is. It's as if like you open a bank account with Goldman Sachs and you're able to earn Goldman Sachs shares because you deposit money into your bank account, and with time you're able to earn more shares. So taking that example and putting it in DeFi, that's kind of literally what is happening in DeFi. So you provide liquidity to Compound, you're able to earn Comp tokens, which represents a stake in the Compound product.
Yeah, I mean, simply put, you have some economic resource that you give out for other party to use, basically, and you're being rewarded for that. So that's what like yield farming and liquidity mining does. So the next question, what do you recommend for beginners in DeFi to do to get started?
Yeah, there's a few good like YouTube channels. One which is DeFi Dad. He actually works at Zapper. He's an awesome dude that's really good at putting DeFi. He's much better than me at explaining DeFi to beginners. So you can definitely look at his channel. And honestly, like the best way for beginners in DeFi to get started is just to get started. I think you can start by buying a bit of ETH, sending it to MetaMask, which is a wallet, and then start trying out different protocols, Uniswap, Compound, and that's the best way. Like it's moving so quickly that often even the YouTube channels can't keep up with all the innovation. So the best way is just to try it. And often, like when you actually try it, you're like, oh, okay, it's not that complicated. It's just you have to kind of live it. It's like trying to explain the internet to someone that never used like a web browser or anything. Like it's very hard to just put out through words.
Yeah, I think approach to learning from just doing is probably the best one there. So you don't need to have like a lot of money or like put in, but when you're gonna like go through these transactions, like you want to just exchange using decentralized exchange or provide some liquidity somewhere. Like to be a liquidity provider, you don't need a lot of money. Like you can provide $5 if you want. Like there's no limit really there. So I would also recommend just play with different platforms and the main ones out there like the DEXs and some other platforms. Okay, what do you think of about the emergence of new decentralized insurance protocol? What do you think is missing to enable decentralized insurance more generally?
Yeah, we did talk about that a bit earlier in the talk, but yeah, insurance is one of the parts of DeFi that is exploding right now, and probably to offset kind of like the security aspect around a lot of different DeFi projects, and a lot of so Nexus, Cover, they all allow you to provide money and insure something and be able to earn yield. And that's going to be a critical component because that's going to be like the backbone, the security backbone of DeFi in general. So more generally, I think with time, there's going to be just even more money pouring into insurance. And the larger pool that we have in insurance, the more confidence we have in products, because if there's an issue, well, you're always insured. But like the progress that's been made around insurance has been like crazy. It's been amazing. Like I think Cover already has about 100 million in liquidity provided to provide insurance for a bunch of different projects.
Yeah, I mean, the space is growing fairly rapidly, but I think approach to security through insurance is kind of a vital one, because no matter how many audits, no matter how many programmers like really look into the code, bugs are inevitable. There's always going to be that risk, and so it's, if there's a risk, there's a market for it. People who want to buy it, people who want to sell it, and I think these protocols are very useful for that. And so, yeah, I'd say suggest looking into, there's Cover protocol that just launched recently, Nexus Mutual, that has been out for a couple of months now. I think Insure Network is also, but it's not live yet. Yeah, so there are a couple players there that are pursuing that. I personally started pursuing that too. I'm working on projects of myself.
Nice.
My own. Yeah, I haven't released it or anything. It's just stealth. You're actually the first people out there who like just know about it. But I thought I'd drop it there. I just have like a little bit of a different approach. So yeah, I think the problem is very much unsolved yet. There are some good things about like Nexus versus Cover. So Cover and Nexus are kind of like the bigger players right now out there. And obviously Cover got a lot of validation from just being associated with Yarn. But their approach is like quite different from what Nexus Mutual is doing. But all right, let's go through the other questions. So how would one know what is secure and what isn't? This is a good fundamental question.
Yeah, and it's one that like there isn't really like an answer to, like a lot. Like I think it's mostly about being able to identify risk. So it's to look at different products and to be able to assess like taking Uniswap. Uniswap has existed for a while. There's been billions and billions of dollars that went through it. So it's very safe to say that, it is pretty secure. If it's a new project that popped yesterday, then that's when you have to like be much more careful and be aware that if you put money through there, you might not be able to get it back because it hasn't been battle tested at all. Also, like being a developer definitely helps around that because you can look at the smart contracts, you can look through the code, but that's not for, obviously not everyone can read code and understand what's going under the hood. So yeah, like most of the time, like it's really just about being able to assess risk. Like if it's something that appeared yesterday, it's an anonymous team, nobody knows the product, then that's probably the riskiest. Like if it's a team that's trustworthy, that's built stuff in the past, it's still a new product, so it's definitely more risky, but maybe not as much as if it was, just some random people that built it. So yeah.
Yeah, I would also just add, just about the risk. You should understand when using these platforms, like what type of kinds of risk are you exposed to. Obviously, there's always the smart contract bug risk or exploit, but also, it's good to think of like what is actually like happening. Like, let's say when you're providing liquidity on Uniswap or something, one of the risks is impermanent loss. And when the whole DeFi just started, many people weren't aware about it and ended up like losing money. And so just being aware like what's happening, or if you use some aggregators or other platforms, there's this term of like money Legos on DeFi. It's very helpful to understand if what products are you actually touching. If you're using some platform that is going to use the other platform and that one is using the other one, you have to like really think about this chain of events, what's actually happening, and to understand like what risks are you exposed to. So obviously right now it's very early for a lot of projects, and so it's a very risky environment. Okay, how does Zapper make money?
Right now we don't make money. So right now our goal, like we basically just got started not even a year ago. Our goal is to be able to, obviously we have growth in mind, and making money isn't like our number one priority, but we are talking about, different models we could apply. But like, just to say long term, our goal is to have Zapper be a community-owned project. So depending on exactly how we're going to go towards that goal, it does impact how we determine our business model. But I mean, there's different ways we could do it. It could be like a fee on every, time you add liquidity or on an exchange. So I always think like building a product that has, product market fit is much harder to find than a business model. Like a business model is usually pretty easy to figure out.
Yeah. So how are you guys like financed so far?
Yeah, we've been financed mostly through venture funding. Initially, we had a few grants from Gitcoin, and also from protocols, so like Synthetics, because part of our product helped Synthetics. We got a grant from them. But once Zapper started growing, we received outside investment.
Mm-hmm. Okay, there's another good question. What do you think about testing in production? So to the ones out there who are not very familiar with Andre, so Andre Cronje is became sort of this decentralized finance star developer. Everybody is following him now. He is like the founder of Yarn protocol, and he's kind of like motto is test and production. So basically meaning that he deploys contracts live and lets them, basically there's no like beta testing. He just wrote a product and it goes live and people start using it. So that's sort of like what testing in production means. So what do you think about it, Seb?
Yeah, I think the way he describes it probably isn't as like what's interpreted by the community, because like at Zapper, we do a lot of testing on production. And when we say testing on production is the only way to really know the smart contract works is because DeFi is full of Legos. The only way to know exactly how it works is to see it work, in the environment it's supposed to live in. So even if us at Zapper, we have a smart contract to deploy, if we deploy it on a testnet, there's a lot of economic context that's lacking from DeFi to be able to really know if it works. So testing production is really being able to see exactly how it, applies in DeFi. Now, the part that's dangerous is if you put out a new smart contract and then announce it in the public, hey, this is the new thing I built. Usually like what you do is you deploy it silently to production, so to Ethereum, and you do some testing internally. And then once you assess it's good, then yeah, that could be deployed like on Zapper.fi. So like our process is we'll deploy the smart contract to production, so to Ethereum, we'll test it. And then once we assess it's good to go, then we'll put it live. But we won't be like, hey, everyone, come use this smart contract.
Yeah, but also, so since a lot of people follow Andre and everybody wants to make money and yield, you might not even advertise. Like people watch his deploy addresses since it's on the blockchain.
Yeah.
Just I think about a month ago, maybe a little more, you probably heard about it, except the Eminent. So basically he deployed a new product that wasn't even finished, and people put in millions of dollars in without, like, there was no user interface, there was nothing. Like people submitted transactions just like manually, basically on the blockchain. And then one smart guy came in and manipulated the contract with the flash loan and just drained it. So took all the money back. Well, not back, just took all the money from it. He did return, I think, $8 million, which got later distributed. but that's sort of like the danger of it. It's, you know, real money at stake. And that's why he got a lot of heat for this approach of testing in production, because sort of he's, you know, that big influencer. Everybody follows him, and he just deployed this contract that people lost money on.
Yeah. Yeah. And I think he's now very careful to how he deploys contracts.
I mean, he went silent for a few weeks, and now he's not as active on Twitter. He used to like tweet every day, or just being like really active. And I think after getting like hundreds of death threats, he was just like, okay, I'm gonna step aside for a little bit. So yeah, he's being way more careful about that. All right. So the next question is Zapper hiring? I think you already said that you guys have 2 open positions.
Yep.
Can you tell us more about it?
Yeah, so we have 2 open positions. I'm gonna put down the link in the chat. So we have 1 spot for a software engineer. So pretty much a generalist, front end, back end, smart contracts, Ethereum. And the other position, which is a product designer. So basically, you know, building out the, designing the interface for Zapper. So yeah, those are the 2, the 2 positions that are open right now.
What do you guys build on React, or like which like what do you use for the front end?
Yeah, so React, Next.js. Yeah, mainly that's our stack on the front end.
All right. What other questions? So do you think the future of DeFi is anonymous?
I think that's a bit tricky. I think yes and no. And what I mean is, like, yes, we'll have like identity and DeFi, but under the form of reputation. So early in the call, we talked about right now, every type of loan is over collateralized. So you have to put way more money to be able to borrow. Like, you can't borrow more than you actually deposit. And the reason with that is, like, there's no way of being able to trust that the money will be returned. Like, if I am able to borrow 100K without putting anything, there's nobody that knows who I am that can knock at my door and do anything about it. But if there's a reputation system, like, that's kind of sort of like identity, in the sense that like, an account has this reputation that if it does something bad, then it's no longer able to do any borrow. So I think yes and no. Like, there's some projects that will basically, like, DeFi is going to be a spectrum of very decentralized, where, you know, you can have full anonymity, and some projects like upper in the stack where perhaps you'll have to go through KYC, just like Nexus, to get their token NXM. You have to do a KYC process. In terms of, like, will the government be able to track down addresses and know who you are? I honestly, I don't know, but what I can say is that there's a lot of different options to basically kind of protect your identity. Like, there's different applications, whether it's Tornado Cash or, you know, layer 2s that are able to, just protect your identity. So I think for people that really care, yes, it will be able to stay. You'll be able to stay anonymous in DeFi.
All right. It's already past 6. So we can keep going, or I guess if you know, I understand if you have to move on with your day. But I just want to say thank you, you know, for all the answers. It's been a great pleasure. And I mean, nice meeting you. Obviously.
Absolutely. And we should definitely would love to hang out with you guys. You had some great questions, and happy to help you in any way I can.
Thank you.
Awesome. Thank you so much, Seb. And actually, please stick around. We have a networking portion after this, so there's that. That's where the community hangs out. Nikita, Seb, thank you so much for doing this. This was a great conversation, really. I'm dropping some quick links in the chat. If you're not a BAF member, please become one. It's completely free. It takes 10 minutes to fill out an application, and it's the way we can understand what you're looking for in the crypto industry, and how we can help you achieve your goals. Also, check out our YouTube channels. We have awesome events like this recorded. This is gonna go on our channel later tonight. If you missed a part, please follow us on Twitter. And if you feel generous, donate us to support. We're mainly volunteers, and we do this because we believe in the industry. Other than that, Seb, Nikita, thank you so much. I see you all in the networking session. If you wanna talk and hang and meet other people in the virtual table, have your camera and mic on. That's how you will appear on screen, and people will be able to see and listen to you. Other than that,
thanks to Cameron too for stepping in for me.
Oh yeah, and sorry about that's some things that don't work out really well with Remo. One of them is the browser. But for the rest, it's a pretty nice software, especially for networking. So I encourage you to meet other people. And again, as I was saying, Seb, you're welcome to come back anytime. Good luck with Zapper. We're all using it and we love it. So yeah, I see you guys in the networking.
Awesome. Thank you.
Thanks.